Hey everybody, this is Matt with Rated M Lifestyle. This is my welcome back video. I've been away from the YouTube game for a little bit, but I wanted to share some recent clips that I saw and share the excitement that I have, so hope you enjoy.
We are live from Bloomberg's world headquarters in Midtown Manhattan, streaming on Twitter and on Facebook. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Held back are now front and center in the crypto regulation game. We'll discuss with Perry Boring of the Chamber of Digital Commerce.
Plus, Goldman Sachs teams up with Galaxy Digital. Details on the latest move by Wall Street to embrace digital assets.
So we will have details on those moves coming up, but first let's get you up to date with the moves we are seeing across digital assets.
Bitcoin has this really beautiful lane of being digital gold or a store of value. If you don't trust your government's currency, traditionally we put it in diamonds or gold. This is the first really digital version of that. The whole world's not going to flip to Bitcoin overnight, but you're going to see more and more people say, I want to have some of my money outside of the sovereign. Bitcoin is a lifeline to people in countries with really poor stewardship of their economy. And we should be thrilled that Russians can get some of their money in Bitcoin so they're not completely broke holding worthless rubles.
That was investor Mike NOVOGRATZ with his view.
Joining us now here in New York is Perry Boring, founder and CEO of the Chamber of Digital Commerce. It's a trade association representing the digital asset and blockchain industries. Perry, great to have you in the studio. Thanks for joining us. What's your hope for regulation? I mean, clearly there are going to be multiple agencies involved, and it's going to be very complex. How do you see it? How would you like to see it turn out?
So in 2019, the Chamber of Digital Commerce, we called for a national action plan for blockchain. So we have some gaps in the way the federal government has been approaching digital assets. First and foremost, we have a very fragmented approach to regulation with the SEC and the CFTC, and at Treasury, you have different approaches from FinCEN and OFAC and IRS. Congress is getting involved. You mentioned the consumer regulators, the FTC, the CFPB. There's a lot of stakeholders. There's a lot of cooks in the kitchen. So U.S. competitiveness has been one of the things that I thought was most promising that came out of that executive order.
Yeah.
It tasked the Commerce Department to ensure the U.S. can compete globally. So we need to have a strategy. We need to have a plan. We need to have a way that all these agencies can coordinate in a formal way so businesses know the rules to the road so they can compete on a global playing field.
So if you were making that plan, what would it look like?
Well, first, we need to recognize the critical importance of this technology. As Jim Rickards just stated, he said this is much bigger than what I think most of us can even comprehend. I believe this is the most important technology we will see in our lifetimes. Mark Andreessen has said it's just as important as the internet itself. So first, we need to recognize.
And Jim even said it himself. He said it's a medium like the computer. You know?
Absolutely, it is. Yeah, absolutely. It's a technology and it's a tool, and it's going to have wide-reaching impacts for the financial sector, but also other industries. And we need to ensure that we have public policies in place that protects consumers, protects the financial system, all those things we all care about, but does not stifle innovation and further encourages the development of this technology here in the United States.
Well, and you at the Chamber of Digital Commerce have pointed out that accounting standards is one of the biggest barriers here. How do you go about fixing that or formulating that?
So we have called on the Financial Accounting Standards Board, the FASB, to issue accounting standards for digital assets. It seems like such a simple thing, but without having accounting standards, U.S. public and private businesses do not have the tools to make investments in cryptocurrencies and put them on their balance sheets. So the lack of having accounting standards has caused all these companies to treat them as indefinite-lived intangible assets, which is incredibly punitive to anyone putting Bitcoin or other digital assets on the balance sheet. So it's a simple fix. The FASB needs to issue accounting standards. They have taken comments from the public last year. They found at the end of last year, the board found that cryptocurrency is the #1 priority of their stakeholders. So the process is in place, but they do have to make that decision to go ahead and issue these standards, and we are encouraging them to do so.
Kaylee and I were talking before the show about an issue that a lot of people raise on Bloomberg television, the fact that China looks like it's more competitive than the U.S. right now in this space because they already have the digital yuan. when we talk, though, to Mike McGlone, Bloomberg Intelligence senior analyst for commodities, he says we have a digital dollar, too, in the form of Tether, and that makes us just as competitive or maybe more because it's the most traded digital currency. What do you think?
Great point. So we don't want to compete with China by trying to out-China the Chinese. We don't share the same values. We want to make sure that the rails that will be used to fuel our financial system globally is built with Western values. So I believe the way we win this race globally is to empower our private sector. There are many U.S. businesses that are regulated here in the United States that have issued digital dollars, and we should be finding ways to partner with them to ensure the U.S. dollar is extended in commerce globally in cyberspace and on blockchains.
Well, you talked about Western values. Let's talk about Western sanctions, because there is a narrative out there that cryptocurrencies can be used to circumvent that. We heard Christine Lagarde, the ECB president, talking about that very thing today, essentially saying, certainly as we speak, that is what is being done. This is something we've heard from Senator Elizabeth Warren as well. What would you say they are getting right or getting wrong?
Well, they're getting it wrong. Let's just debunk this, and let's look at the facts, and let's look at the data. So U.S. Treasury Undersecretary Nellie Lang just issued a statement where she said the transaction volume is so small that she does not believe that this could be a tool for widespread sanctions evasion. Cryptocurrencies.
But shouldn't it be someday? Isn't that kind of the point? We should be able to evade government censorship with Bitcoin. It's a libertarian currency.
There are laws, there are governments, they do exist, and they have the tools to track and trace all transactions happening on open blockchains like Bitcoin. This is not a good tool for bad actors, because law enforcement knows how to track and trace the money much more effectively than other forms of money like fiat or others. So we're not seeing any real transaction volume to evade sanctions. The top law enforcement agencies, even at the White House, within FinCEN, and at the FBI, have all made statements in the past couple of weeks saying they see crypto as a poor tool for sanctions evasion. And in the black markets, where that could potentially be happening, there's not enough transaction volume happening in those markets to do anything on a wide scale.
I wonder with which currency people evade sanctions the most.
I'll let you guess.
The U.S. dollar. Perry-Ann Boring, thanks so much for joining us. Great having you in the studio.
So much,
she is the founder and CEO of the Chamber of Digital Commerce. Coming up, Goldman Sachs, over-the-counter crypto options trade. More on how the bank is expanding its digital asset offerings next. This is Bloomberg.
Crypto has been one of the great stories in finance over the course of roughly the last 15 years. I still have my skepticism, but there are hundreds of millions of people in this world today who disagree with that. And so to the extent that we're trying to help institutions and investors solve their portfolio allocation problems, we have to give serious consideration to being a market maker in crypto. And I think it's fair to assume that over the months to come, you will see us engage in making markets in cryptocurrencies.
That was Citadel founder and CEO Ken Griffin. You can watch that full interview on Bloomberg Wealth with David Rubenstein tonight at 9 p.m. in New York. Well, while we're talking about institutional adoption in crypto assets, Goldman Sachs has executed its first over-the-counter crypto options trade. It's one step in the expansion of its digital asset offerings to Wall Street investors. For more, we're joined now by our contributor, Shonali Bosick. So, Shonali, what does this mean more broadly speaking for the way the industry is adopting crypto?
Yeah, remember, Goldman Sachs was really one of the first to start building up this market for crypto derivatives, getting in early when it came to futures, getting in early when it came to NDFs, non-deliverable forwards in the currency market where it's popular, and then also now options trading. So you have them across the whole board. What does this go to say, Kaylee? It goes to say that every day there is not a spot ETF for Bitcoin. Investors will look to different derivative options, which you're seeing Goldman facilitate here, Jane Street, and as you saw from that soundbite, potentially Ken Griffin's market maker in the future.
In the U.S., right? Because we have spot ETFs in Canada, as well as exchange-traded products and stuff. Listen, you sit across from me in the newsroom, so I hear you talking to the biggest players on Wall Street all day long. You're constantly working the phones. what do they tell you about institutional adoption of crypto? Or are they investing for their own P&Ls?
There's two things that are happening here. If you're investing in Bitcoin as a hedge fund, many people said we don't need these products, we can just go buy it ourselves. For the people that are not comfortable with the custody aspect, with the security that has to deal with Bitcoin, then yes, they do look to banks, they look to Galaxy, Genesis, and other firms that are offering derivatives that they can use. One note that I want to point out from Eric Balchunas here, how lucrative the crypto intermediary business is. $50 billion in fees over a 12-month period is 3 times as an ETF market maker. So there is really a lot of money to be made here. There's a lot of spread, as we know, and there is a lot of demand for clients in these different forms of products because that risk tolerance is different.
So what should we be watching for as potential next moves from Wall Street on this?
Well, interestingly, we talked about trading. The investment banking part is also interesting. This idea that you can be bigger when it comes to listing tokens, when it comes to raising money in different forms, whether it be in the NFT world, through the DAO world. Something we joke around a lot about is there going to be a BlackRock DAO? Because there's so many other investing DAOs that are formed. And wealth management, Kaylee, a lot of people in the wealth management world, we saw Morgan Stanley, Matt, get into this business via their work with NYDIG or with Galaxy. But will a UBS, will a Credit Suisse get bigger into the space such that some of the wealthiest clients
Well, they have to, don't they? I mean, it's not a joke. You talk to businesses all the time about raising money in digital assets.
And that's the key question here. Do they have to? Right now, they look at it and they have a lot of fears. They're watching to see how certain SEC proposals come through, to see how certain, not regulatory matters, but enforcement matters, more importantly, come through. Because they want to see how money is used not just for the better, but also for the worse, as you're talking about.
All right, well, we're watching Blythe Masters SPAC go gangbusters right now. So obviously, investors are down to clown. Thank you very much, Shonali. Back.
Okay, let's get you caught up on some of the headlines. First up, if you are old enough to remember the days of downloading music and sometimes viruses from LimeWire, then this one is for you. After shutting down 10 years ago, LimeWire will relaunch in May, but instead of peer-to-peer music sharing, it's offering NFTs. The tokens will still be music related. They'll focus on limited editions, unreleased demos of songs, and more. And yes, you will have to pay for them. Next up, the Justice Department and SEC just charged a crypto executive and his sister with defrauding retail investors out of millions of dollars. The SEC alleges that John Barksdale and his sister Jonatina Barksdale raised $124 million through a multi-level marketing business offering retail investors a subscription package that included an Ormeus coin. Now, the siblings claimed that the coin was backed by one of the largest mining facilities in the world when really mining operations had ended back in 2019. Now, ironically, the coin slogan translated from Latin is "out of many, one makes gold." A crackdown on crypto crime is just one part of Biden's executive order announced yesterday. He also tasked federal agencies like the Treasury and Commerce Departments with studying U.S. financial stability and securing U.S. leadership in crypto innovation. Still, some have said that Biden's directive is too focused on research rather than action. In the wake of that announcement, fellow host Kate Rooney sat down with Ripple's CEO Brad Garlinghouse to talk about the new order and the company's current lawsuit with the SEC, which aims to define the XRP token as a security.
Joining me now, Brad Garlinghouse, CEO of Ripple. Brad, thank you so much for being here. It's great to see you.
Good to see you too, Kate. Thanks for having me.
Of course, it's a big week for crypto with this executive order. What does this mean for the industry, and what's the big takeaway for you?
Look, I think this has been a very positive event, and frankly, we had heard, as I'm sure you had, a lot of rumors about an upcoming executive order, and I think this exceeded my expectations of what we could have even hoped for. Because, look, the first step to solving a problem is acknowledging you have one, and for me, the executive order is really calling out something we've been saying for years, that one, this is a massive industry. It's not going away. We have tens of millions of U.S. citizens participating in various ways, which is awesome. But it also is calling out that, look, we have had a fragmented and siloed approach to regulation here in the United States. And that is impacting the United States leadership in this very critical, very rapidly growing industry. So I thought it was a very positive evolution, and I'm hopeful that it'll catalyze some solutions that we haven't seen yet.
And that seemed to be one of the big themes, competitiveness and the U.S. not wanting to fall behind on being on really the forefront of innovation. Do you think that played into it, the U.S. feeling like it might be falling behind?
I think it's clear it had a big impact in why the executive order was written. I think what we have seen really, and you kind of see, particularly the talk about silos, you kind of see to some degree the executive branch saying, hey, this SEC, the Securities Exchange Commission, can't take singularly the lead because it has to think holistically. Every time the SEC is mentioned in the executive order, it's alongside the CFTC as well as the CFPB. And I think we have seen here in the United States, things have been withheld. Sorry, they've been moving more slowly. And as to your question, outside the United States, in countries like Japan, in Singapore, in the UK, in Switzerland, even in the UAE, you're seeing entrepreneurs and investors able to pursue opportunities in crypto and blockchain without that uncertainty because the regulatory clarity has been there. Something Ripple has been calling for from well beyond even the recent lawsuit with the SEC.
So you mentioned the SEC. I got to ask you about the SEC versus Ripple case. What can you tell us about that at this point? What's the latest, and has there been any progress when it comes to that lawsuit?
Well, it's been almost not quite a year and a half since the SEC sued Ripple, sued myself, sued Chris Larson, and we are moving as expeditiously as we can. It has certainly been frustrating to see the SEC drag their feet. This past week, expert discovery wrapped up. The SEC had sought delays around that, and I mean, one of the ironies around this has been that Gary Gensler, the chair of the SEC, has been quoted as saying, "Justice delayed is justice denied," and then the SEC goes out and seeks delays. It's rare for a defendant against the SEC to be pushing to see things happen faster, but we think it's very clear that the SEC has overstepped. The SEC has taken what's called the Howey test, which is the test to determine if something's security, and they've really stretched it beyond recognition. So I'm hopeful and optimistic we'll see some decisions around some key elements that are before the court today, that maybe within weeks. We'll see. I think the questions that that the court has been asking have been very thoughtful, and I'm hopeful that we'll get some clarity soon.
And you've described the SEC in the past as really picking winners, and the idea that XRP as a cryptocurrency has been taken off of exchanges like Coinbase. In some senses, investors have missed out and not been able to trade XRP on those exchanges. Ripple has also seen certain downsides. Is it fair to say that the SEC is picking winners when it comes to XRP or other cryptocurrencies?
Well, one of the things I loved about the executive order, there are a number of themes that we have been at least championing in the marketplace that we saw in that executive order. One of them was about the importance of a level playing field. And as you pointed out, a big part of that executive order was around U.S. competitiveness. And what we saw happen at the SEC is picking winners and losers, saying, hey, we don't think ETH is a security, but we do think XRP is a security, despite a whole lot of similarities. So I think that with the executive order, I'm hopeful that we'll get some of that level playing field we have sought. It's certainly not the role for the federal government to pick winners and losers. I think I'm a supporter and believer in what's happening in the Ethereum ecosystem. There's different use cases. And again, the executive order calls out specific use cases, for example, around cross-border payments, where Ripple has been focused really since the beginning, and how XRP, the digital asset kind of native to our solution, can really solve a lot of problems and benefit many consumers and businesses here in the United States.